And Felix here with the incredibly important weekend roundup. Why is it incredibly important? There's only one thing you now need to be thinking about. 2nd of November, the Fed interest rate decision. Now, it's a foregone conclusion, as Winston says there at the back, that it's going to be a 75 basis point hike, but that's not what matters here. If you've been listening to us for the last couple of weeks, and of course none of the following or the above is financial advice, we just aim to make you kind of more rounded, more informed, but please come to your own conclusions. That's what Winston says too. We've been saying, look, the market's going to move up. The market's going to gap up. We've had the worst set of big data tech earnings just come in, and the Dow was up like, 14% this month or something. One of the best months in history. So why is this going to continue? Well, because we're seeing central banks around the world easing. Winston's pretty easy back there. The Canadians, the Chinese, the ECB is convinced markets they're going to turn more dovish. And the Fed is going to have a really hard time continuing with this. We're going to keep getting the sledgehammer out month after month after month, because you can only raise interest rates for so long at such a high level, 75 basis point each month till you break stuff. And they know that. They can see the bond liquidity just disappearing. They can see the volatility in the bond markets at crazy levels compared to stock markets. And they know there's a significant risk here. So what are we going to do this week? Well, we're of course going to watch it. We're going to watch exactly what he says. I'll cover it live for you. I'll give you my interpretation and notes compared to what he said before. And in the meantime, we are getting ready to be long volatility. What does that mean? Well, you can make money not caring about stock prices and fundamentally only caring about volatility. Now, volatility is going to go down after the Fed meeting, and then it's very likely to increase again coming out of earnings. So that happens 4 times a year, and we make money out of that 4 times a year. And we're also going to take advantage of some of these earnings plays this week. Not setting up trades before earnings, because that's gambling. We do it after earnings once we have the numbers, and we did that last week. It was very, very nice and profitable. We did it on Microsoft, we did it on Google, we did it on a couple of trades, and we made a load of money. Some cyclists just cycling past. Lots of men in Lycra around here. You can't swing a cat without hitting one of them. So that's essentially what our plan is and our strategy is. That doesn't mean you should follow it if you don't understand it. And if you're not on our coaching calls, you probably really, really shouldn't. And of course, always do some research. But there are a lot of traders out there who don't really care which direction stocks move in particularly. But I am looking at still this continuation of a short-term bull run, and that should in itself, once vol goes down, make it go back up. So what does that mean? Well, actually, I think there will be some of that, but I think essentially after the Fed speaks, after the last big earnings are in this week, the PayPals and so on, I think after that we go back into this slightly duller market with lower volatility, and that's exactly when we're gonna pounce again. So my view for the week is really just watch out for that big macro data, be aware of it. If you are trading, I'd quite frankly close out of most things before, because it's a big risk and we don't really want to sail into storms. We want to avoid storms. That's Winston's philosophy back there. Now Winston's looking a little bit miffed that we're still in the car, so we're going to go up into the beautiful mountains here. Going to go up to about 3,000, maybe 4,000 feet or something like that, and we're going to have a brilliant time. So I wish you a beautiful weekend, and if you have any questions, pop them in the comments down below. I read them all, I reply them all, and see you soon.